216, journal entries. All right, the following transaction occurred for Lawrence Engineering, and we're supposed to journalize the transactions. We're not going to include explanation, and we're supposed to use the following accounts, and it gives us the account names. Okay, I'm sorry. On July 2nd, I received $14,000 contribution from Brent Lawrence in exchange for common stock. Okay, so the business, we're doing the entries for the business. The business got cash, which is an asset. It's increasing, so I'm going to debit cash for $14,000. All right, in return, I gave Brent common stock. Common stock is equity. It's increasing, so I'm going to credit the common stock account for 14. All right, notice I did the debit first, the credit second, and I indented for the credit, okay? All right, the fourth, paid utility expense of $370. All right, so I paid an expense. Expenses are recorded with a debit, so I'm gonna write it first. So I'm gonna have utility expense for $370, and then I'm paying it with cash. Cash is an asset. It's decreasing, so I'm going to credit cash. All right, 7.5. Purchased equipment on account, $1,000. All right, so I purchased equipment, that's an asset. So I'm going to debit equipment for $1,600. I purchased it on account, which means I haven't paid for it yet. I still owe for it. So that's a liability. It's increasing. So I'm going to credit the liability account payable. All right, on the 10th, I performed services for a client on account. Okay, so now somebody owes me. I have the right to receive payment. They haven't paid me yet, but I've earned the money. So I'm going to debit the asset account, accounts receivable. It's an asset and it's increasing, so it's recorded with a debit. So I have accounts receivable for $2,900. Then I'm going to indent, and they owe me that money because I performed a service for them. So my credit's going to be to service revenue for $2,900. All right, on the 12th, I borrowed $7,100 in cash, signing a notes payable. So I borrowed money from the bank. I received cash, which is an asset. It's increasing, and I recorded increase to an asset with a debit. I borrowed the money, so it's a liability. It's increasing. So I'm going to credit note payable to show the increase in liabilities. On the 19th, cash dividends of $200 were paid to stockholders. All right, so this is a dividend. Dividends are recorded with a debit because they decrease equity. And cash went out the door. Cash is an asset. It's decreasing, and that's recorded with the credit. 721. Purchased office supplies for $840 and paid cash. All right, office supplies are an asset. They're increasing, so I'm going to debit office supplies for $840. I paid for them with cash. Cash is also an asset. It's decreasing, so I'm going to record that with the credit. And 727, I paid the liability from July 5th. So up here on July 5th, I bought some equipment for $1,600 on account. I'm now paying this accounts payable. All right, accounts payable is a liability. When I pay it, it's going down. Decreases to liabilities are recorded with debits. So I'm going to debit account payable, and I pay for it with cash. Cash is an asset. It's decreasing, so I'm going to credit cash. All right, notice every journal entry has a debit and a credit, and the numbers add up to each other, okay? The debit is always on the first line. the credits are on the second line and you indent before you write them.